So one real estate stock that I've been pretty bullish on lately over the past year or so, since the I call it the pandemic bubble kind of faded away, is Redfin, the real estate technology disruptor platform, things like that. It's up 125% this year so far. It's been a pretty big winner for investors who got in at the bottom or at the beginning of this year. And to be fair, there's a few things that I really think that they've done that deserves this price. One, they've done a great job of moving past its iBuying business. One, they were smart enough to not let it get as big as, say Zillow let theirs get before they realized it wasn't going to be a viable business. So they were able to wind down Redfin now, kind of control their losses. Their net loss in the second quarter was roughly 1/3 of what it was a year prior. And it's heading toward break even. It expects to be break even on an adjusted EBITDA business or basis over the next 12 months. And it actually expects net income, GAAP net income profitability in 2024. It's gone through several rounds of layoffs, done a great job of expense reduction, things like that. It's done a great job of building out adjacent services that are needed no matter what, like mortgages and title services. Clearly, both of those have lower volumes now than they did a year or two ago, but building out their share in that should pay dividends long term. Great job of building out partnerships. They partnered with Zillow recently, where Zillow's new construction listings will be automatically syndicated to Redfin. As Tyler and I have talked about in several videos, it's a great environment for new construction right now, so I love seeing them get a piece of that. And they've done a great job of becoming the source for real estate data. If you hear a lot of real estate quotes being thrown around in the news today, for example, they put out a press release saying 1 in 8 San Francisco home sellers is losing money. That's quoted all over the place. They're doing a great job of really getting their name out there and stuff like that. So, Tyler, what are we missing?
Well, it's if I squint hard enough, I can see the case, right? It unwound a lot of that, a lot of its housing inventory. So there's not much inventory left. So that's not overhanging the balance. Like if you were to just look at a vacuum and be like, whoa, this thing's trading for less than 8 times free cash flow. That sounds awesome. But that's because of all the changes that it made to its business. There's just part of me that says, there are still some losses that it's kind of holding on the balance sheet. If there's anything that I feel like people should take away from when I talk to you about housing and real estate, it's like the balance sheet matters. It really does, and like how the mechanics of the balance sheet works. And it took such a crippling hit trying to unwind all of this that it's going to take a really, really long time to recover. I know its market cap is $1 billion right now, but right now it's total equity, like common equity, like how much if this company was liquidated today and how much the books say it's worth. It says it's worth about $49 million for its investors after we take out all the debt and stuff like that. And so you look at things like that and you go, as better as things are right now, or looking better, I feel like the market is pricing in a certain amount of euphoric growth that I don't know is necessarily going to be there. Yes, it's taking some market share in home sales, and all the things you're talking about, market data is all good, but the home selling business, especially existing homes, is just such a smaller market than it was a couple of years ago. And there is part of me that says it might take us a really long time to get back to existing home sales kind of really spinning back up again. We've seen higher interest rates. I'm not wholly convinced that we're going to start seeing a decline in interest rates. I'm much more inclined to believe this might be the territory we're hanging out in for a little while. And because of that, a lot of these people who are sitting on wonderful mortgages aren't going to want to move for the sake of moving. It's all going to come down to like people that move are moving because they have to, or they're buying a house because, it's family formation. And it's a much, much smaller market than we saw in 2020, 2021, where people were like, cash that equity check, get that mortgage refinance, all of the things where Redfin can get a swipe of revenue. And so with a much, much more competitive environment and a weakened business, like that's a recipe for lower returns and potential stock under, at least business underperformance over the long haul. We can talk day and night on the valuation and things like that, but I think in the long run, if you're truly holding this as a buy and hold investment, it really feels to me like a recipe for underperformance.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by the Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.